All right, let me know if you can see my new screen quickly and we proceed. Can someone see the screen? I'm very much concerned about that, because what's the essence of me showing my screen to myself alone if you are not seeing the screen? So let me know if you can. Okay, cool. All right. Thank you for letting me know. Yeah, thank you. So I think I can proceed now. So now there are some rules that you need to follow when it comes to trading this, tweezer tops and tweezer bottoms in the market. And I'm going to lay down these rules for you. And if you follow them carefully, you are going to be profitable in the long run. Okay. All right. So I have the rules outlined over here. Let me just check them out so that I give them to you as I have been using them. Okay, I can only teach you what I know, not what I don't know. So yeah, what I do is what I am going to teach you. So good. I basically have like almost 9 rules set up over here, and the first one is, locate a fully formed. Listen, this is where I said initially that you can take your notes and maybe, yeah, your notepad and a pen or so ever, then jot some things down, right? It's very, very much important, right? So the first thing over here is locate a fully formed tweezer top or bottom on the daily time frame. That's the main reason we are even on the daily time frame on my NT5 platform currently. This is the daily time frame on volatility 75. So that's the first point. Locate a fully formed either tweezer top or tweezer bottom on the daily time frame. The reason being that a tweezer top or tweezer bottom formed on a daily time frame, the daily time frame is a higher time frame, right? So any structure that forms on a higher time frame, it is more likely to be respected on a lower time frame. And of course, we are not going to be using the daily time frame to enter our trade or to take a position, because we are literally not kind of swing traders or position traders or so ever. We are day traders and intraday traders, so we are not going to use daily time frame to enter. However, we need a solid background from the daily time frame to actually follow, right? So that's the main reason you want to locate a fully formed, that's underlined word, fully formed tweezer bottom or tweezer top. And now you might be asking, what is a tweezer bottom or tweezer top? Right, quickly let me demonstrate for you over here. Let's say this is one candle, right? I'm just going to leave this over here, and okay, I think let me just use this. Let me make a copy of this and put it by the side. All right, I'm going to change the color of this one so that you get to understand what I want to demonstrate. Let's say we give it lime green. All right, good. I think I'll just put something like this, like a wick on top of it. Then I'll bring it down. Jeez. All right. Forget my kind of drawing, so it is messy over here. All right. Okay, good. All right, so let's assume this is a candidate form on the daily time frame. So this is what I'm using to explain a tweezer bottom or tweezer top for you. Now let's say this kind of pink candle is a bearish candle and a green one is a bullish candle. Now we will consider this as a tweezer bottom. A tweezer bottom in the sense that what the market actually moved from down, from the top, then it came down, right? It came down. I'm just drawing something over it to illustrate the movement of the market, right? So let's say the market moved from the top and came down to this pink area, right? So the market was in a downtrend, moving from the top, and it came down like this. So this is a typical downtrend. Now at the end of the downtrend, we saw these two candles forming, a bearish candle followed by a bullish candle. And look at this, you could see that the bottom over here is almost of the same size and the top over here is almost of the same size. Okay, I said almost because it is not in all cases that they are going to be of the exact same size. Take note of that. They are not going to be of exact same size. I mean, in terms of their length, it's not going to be the exact same size always. So that is why I use the word almost. Okay, because in most cases they are almost equal in length, right? So that's one thing you have to take note of. Okay, so we call this a tweezer bottom because it is forming at the end of a downtrend. You know, if you are moving from the top, you come down, so that's like a bottom. So that this one, the market is reversing from the bottom, right? The market is reversing from the bottom, so that's how come we call it a tweezer bottom. So from there it can go up, right? But let's say this is forming at the top of an uptrend, we will call it a tweezer top. It's pretty much simple as that. I don't really have to waste much time on this because we talked about it in a previous lesson. If you've not gone through the videos in the Telegram channel, you can quickly go through them and you will understand this, right? So I think let me just delete this right now. All right, now that we know what the tweezer bottom is, now let's just move to the chart and see how best we can analyze it, because that's my main focus for this meeting, not to come and explain what the tweezer bottom is or so ever, right? So let me just control B, then A, then delete all. Right, so I just deleted everything on the chart. Sorry. Now let me zoom in so that we can see what I want to show you. Now if you look at the chart, the very first candlestick pattern that you're going to see over here is this is a tweezer top. Why is it a tweezer top? Can someone tell me? I think I'll just go and unmute the person right now. If you want to tell me, just let me know and I'll allow you to speak. All right, just maybe wave your hand or whatsoever and I'll allow you to speak. Why is that one a tweezer top? Just ask to speak and I'll allow you to speak right now, okay? Who is ready? Peter, Ruby, Richie, Caleb. Who is ready? Siddiq, Siddiq, yeah, Siddiq. I don't know, the name has been confusing me. I have someone called Siddiq, so I don't know. All right, who is going to say it? I should go and check the chat room and see if somebody is typing it over there. Siddiq, you want to say it? Okay. I'm going to allow you to speak. You can unmute yourself and speak. Siddiq. Siddiq, not Siddiq. You can unmute yourself and talk. All right, Ruby, I'm going to allow you to speak. All right, Ruby, go ahead and unmute yourself and let's hear you.
Good morning.
Ruby, hear you.
Good morning.
Yeah, good morning.
Yes, I think it is because it is at the top of an uptrend.
It is at where?
In an uptrend. It is found in an uptrend.
Oh, okay, cool. That's awesome. That's awesome. Right. I got.
Thank you.
Yeah, that's it. That's it. So it's actually formed at the top of an uptrend. Caleb, you want to say something? All right, so let me just unmute you so that maybe okay, allow you to speak so that you share with us what you want to share before we proceed quick. You share with us what you want to share before we
I've
proceed
sent it
quickly.
in a chat room, so can you check it?
I'm
I've
not reading
typed it
that
there.
now. I'm on this.
Okay, I think it's because they are of equal heights from the top. You see the candlesticks from the where you've placed the green. You will see the top there. They are of equal heights. So that's what I think.
Okay, that's not bad. But let me just take this opportunity to explain it a little bit further, right? Good. So I'm going back to my. All right, so we are here now. Now it's simple. The first candle that formed, the blue one, is a bullish candle. The next one is a bearish candle. So we are expecting the market to come down. In this case, the only thing that can come down, or how should I even put it for you to understand? Okay, we can say something is coming down if only the thing is already at a height above where we want it to go to. So literally, this is already up, so it's at the top. So it's basically to the top, and like Ruby said, it has formed in an uptrend. From the down, we go to the top. So this is an uptrend, and we have this one forming over there. Okay, we have the tweezer forming over there. So yeah, I'm just going to delete this quickly. All right, so we have this forming over here. Now, how do we catch this move? Okay, how do we catch this move? I mean, the next bearish candle. How do we trade it? Remember, this is on a daily time frame, and you know when you go to the lower time frame, you're going to see a huge move over here. Now, let's say we happen to gather all this. I think this is going to be something like 41,000 plus pips. You know, the calculation of the pips over here is literally different from the forex market, so take note of that. It might appear a lot big over here, but when you go to the main forex, I mean currency market, it's being calculated slightly different. Okay, I'm deleting this. I'll focus. The first rule that I set out was that what the tweezer bottom or top must be fully formed, and now we have this one over here, and we know that what it is fully formed. It is fully formed. So now our first criteria has been met. And remember, you don't trade until what you want to see happen, right? You don't take a trade. That's why I say you need a lot of patience in this game, right? I think I'm just changing the color to something like red. Yeah. Good. All right, so that is it. Here is our main focus. How do we trade this? How do we trade this? How do we get to trade this, bearish candle and gather that 41,000 plus pips? That's a lot of money, right? So that's where we need to move on to the other rules regarding this. Now, the next thing that we have to do is we have to scale down to the lower time frames. That's the 4-hour time frame, 1 hour time frame, 30 minutes, 15, 5 minutes, then 1 minute. Okay, basically I take the entries on 1 minute and 5 minute time frame. So right now we are doing top down analysis. We are from the up and we're going down. We are refining the whole structure. So we are assuming that this over here, this whole candle over here, it hasn't formed yet. The black candle over here, it hasn't formed yet. Okay, That's the assumption. It hasn't formed yet. So how do we kind of trade it before it form? How do we manage to get it or get in before it form? That's what we need to do now. So I'm just putting those things over there so that when you go to the lower time frame, we can identify it quickly. All right. So I'm going down to the 4-hour time frame now, and quickly let's locate. Good. So we have it over here. We have it over here. And note this candle from here to here, it formed the bullish part of the tweezer top, and the other candle from here to here, it formed, here, okay, here, it formed the bearish part of the tweezer top. So like I said, our main focus is how to trade from here up to here. That's what we are going to focus on, because we've seen a fully formed tweezer top. Now our next target is how to trade the next candle that is going to form right after this fully formed tweezer top. Get this thing clear. The tweezer top must be fully formed first before you even take decision thinking about the next candle that's going to form. There are situations where the next candle forming will not give you this direction, and if time permits us, I'll show you some examples on the charts. I believe in a practical application of this stuff. Okay. All right. So we move down to H1 time frame. Okay, because here you cannot see anything that will give you, let's say, entry or so ever. Right. Let me go to H1 time frame, and I'm going to tell you something about this. Okay, this is the H1 time frame. This is the H1 time frame. And if let's say you are applying your normal support, resistance, break and retest stuff over here, all right, you will see something. Okay, you will see something. Let me bring this crosshair over here. Okay, over here, this is a H1 time frame, so take note. Over here, you could see that there was a consolidation. From here up to here, this place, or there was a consolidation in the market. Now, once price came here, okay, note this is not the fully formed, what's the name, tweezer top. The tweezer top, the fully formed, ended over here at this corner. It ended over here. So you could see when price came down here, it started forming that previous consolidation structure. It started forming over here, and price is struggling to go to the top. You can see these numerous rejections over here. Price move up, got rejected, move up, got rejected, move, got rejected. There's numerous, plenty of rejections over here. That alone should tell you that what something is happening in the markets. Okay, these wicks that you are seeing over here, they are rejections. When you check the downside, there is no much rejection over there compared to the top. There are a lot of rejections at the top, right? So that is something you have to take note of. And of course, this over here is a bearish engulfing candle. But note, we are not taking entry on the H1 time frame. So you know that what this candle, it has not formed yet. So that's an assumption. That's how come I've circled it, or I've put it in this red. I think if I can change the color of it, I'll just do that so that it doesn't confuse you. Let me see if okay, yeah, let's leave it like that. I think let me go back to the H4 time frame. Good. So I'm going to change the color to something else. Let's say a little bit pink. All right, so I just put in pink. Now we're back here on the H1 time frame. Like I was explaining to you earlier, this consolidation structure over here, it happened previously, and that should tell you that what something is about happening, right? Something is about happening. And if you are someone that want to trade what we call shoulder, head and shoulder, yeah, this pattern. You can also see that particular thing happening over here. This whole place is like the shoulder, and this is the head forming over here, and this is another shoulder also forming over here, but that's also a different pattern on its own. Okay, that's the chart pattern. That is a chart pattern. A chart pattern is different from candlestick pattern. Here we are talking about candlestick pattern. That's a tweezer top over here, right? So right now we have to go down to the 30-minute time frame and see what we are going to get. So quickly, let me go to that place. Good, we are here now. Since we've already identified this consolidation on a H1 time frame, I don't need to talk about it again. Our main focus is how to grab this move to the downside. Now over here at this joint, there is nothing that you can see currently that will allow you to enter the market. You are waiting for the candle over here. So let me just zoom in a bit. You are waiting for the candle over here to form and close, right? And you could say it's closed bearish. It closed bearish. However, still you are not taking trade on the M30 time frame. I mean 30-minute time frame. The reason why we are not taking the trade over here is because we want to minimize our loss. In terms of setting stop loss, we don't want our stop loss to be big. Here, if we should enter the trade, we will enter somewhere over here. We will enter somewhere over here at the close of this candle, and our stop loss will definitely have to be somewhere here, just at the top of this. But most cases, what I do is I set my stop loss 50%. All right, 50% of the previous candle. So let's say this candle closed like this. I'll mark 50% of it, and when I get to the top of it, I'll measure another 50%, then put it over there. So my stop loss might be somewhere here at the top. Okay, I don't know if you understand my criteria for setting stop loss right now, the one that I just explained. This is how I do it. I take the full candle, right, and I take half of it. So that's half of it. When I get to the top of the candle, I just add a half to it, so that what price will not just kick me out before going to my desired direction. That's how come I have to lower down to the M5 and M1 time frame to take my trades, right? So I'm just deleting that. Now let's go to M15 and see what is happening over here as well. Let me just see if I can locate it really quick. All right. Let me check the charts room if there's something. Okay. All right, I think we are following. If there's something in the chat room, then I think we are following. Now let me explain what you need to see over here, right? So when you see this, let me zoom in. Good. Over here, there's no sign of entry. Okay, now we only enter trades when there's something like bullish. This is an uptrend coming down, so we are looking for bearish engulfing candlestick. So when you check here, there's nothing like that. This is just a normal bearish candle. This is just a normal bearish candle. It's not even up to half of the previous bullish candle, and this is just a series of another candle forming, right? So on the M15 time frame, there's no way we can even enter this trade. Okay, so we'll just wait for it. That's the main reason we are moving down to the M5 time frame to see if we will get a chance to enter the trade. So let me move quickly to the particular chart we are dealing with. Oh yeah, I think it's taking long. Let me just zoom out and see. Good. All right, zooming in back again, and let's see what we are going to do. Good. I like this. This is like full of fun now. It's fun. It's fun. It is like having fun now. Now look at this. Let me first of all ask you, what can you see? What can you see when it comes when you get to this zone? This is the new candle that is forming over here, and this is the candle that we really want to trade. So what can you see over there? Let me know in the chat. Let me know in the chat. I'm checking the chat now. Let me know. Let me know what you can see over there. I can see something. So let me know what you can see. Let me know. Let me know what you can see. What can you see? Just type it in a chat room, okay? What can you see? Just type it in the chat room. Let's see if we are all on the same page. Okay, quickly. Let's do that. Time is not on our side. It's it's like 30 minutes past already because currently 9:35 over here. So just type. Yeah, Caleb Belonia is typing. Type. Let's see. Let's go back to the chat so that we can talk. Good. Look at this, man. Look at this. Like I'm just happy. I'm just happy. Seeing this, I'm happy. Now you are right. I mean, but Caleb, look at this. I'm referring to this, the relationship between these two candles. So clearly, this is a bearish engulfing candle. It's open and it engulfed completely this previous bullish candle, right? It engulfed the bullish candle. So this is a fully formed, bearish engulfing candle. And now we are happy. We want to take a trade on this M5 time frame, having seen this particular, engulfing pattern over here. Okay, note on a daily time frame, this over here is the end of our tweezer top. The tweezer top is not, it hasn't ended at this side. No, it's ended at where the red bar is. That's how come I've indicated it before coming down to the lower time frame, so that we get the specific location of our pattern. So it has formed, over here. The tweezer top ended over here on this particular bullish candle, the small one over here, before our candle of interest came in, which is a bearish engulfing candle. This is like a perfect timing for this candle to form. Like I'm just overjoyed saying this. Now definitely we are going to enter at the close of this candle, because since you don't know the type of candle that is forming, let's say the candle is running up and down, it hasn't closed yet, there's no way you can take a trade. Look at this. There's something over here. Let me show you. All right, look at this. The candle, this bearish candle, actually came down here before moving up, and it closed over here. So what if you saw the candle moving up to this point and you enter at this point? Where at all are you going to place your stop loss? Definitely you are going to place it somewhere above here, and that is going to be a big stop loss for you. Let me check how many pips you'll be running at. This is like, yeah, 4,000 plus. It's too big. 4,000. Let me check what. Yeah, this is like 4,000 plus, and it's too big for you to use, right? I use maximum of 3,500. Yeah, I use maximum of 3,500, and depending on the lot size that I use, that will cost me a maximum of $15. All right, that's what I risk using the lot size 0.003. Yeah. So now we've seen this, and you definitely, like I said, have to wait for the candle to close before you enter. Do not rush in once the candle hasn't closed. Okay, so it's important. Hey, we grant brofo. Hey, brofo na hey. My Korean is not coming, and the English too is not coming. Are there? Hey, yeah, me woo. Anyway, that's just by the way. All right, so we are going to enter on this candle over here, the closure of the candle. Now this is where we need to come to setting our stop loss. All right, when it comes to setting our stop loss, that is what we do. This, let me use this. All right, good. This is our candle. This is our previous candle. Okay, and you definitely want your stop loss to be above the previous candle. However, for me to be on a safer side, and depending on my risk appetite, all right, to be on a safer side, and also depending on my risk appetite, I mean the amount of money I'm willing to lose on a particular trade, I choose to do it this way. I'll take half of this. Okay, I'll take half of this. So I just look at it with my eye. I'm not measuring it with any specific instrument. So yeah, once I take half of it, I'll first of all come to the top of the candle like this. So half of it, let's say from here to here. So we measure the same thing on top over here. So we just push it somewhere here. Okay, somewhere here. All right, so let's see how many pips we'll be risking on this particular trade just to be on a safer side. Okay, so this is 3,600, a little bit above my maximum, and I wouldn't consider that as a bad SL. So what I can do is I can just maybe move it down a little bit. Since it's above my previous candle, I'm okay with that. Now we are not taking this one, I mean our TP, right? Because if you enter a trade, you probably have to know your exit point. I last time posted some shorts on my YouTube channel. It's about you not closing your trade, or not like cutting your losses. You are letting your loss run and you are cutting your wins instead. You are not going to be profitable in the long run, right? So having set our SL, now our next thing to set is our TP. How do we set the TP? For the TP, you set maybe your first, second, third TP. Yeah, this is how I do it. For the TP, I go back to the M15 time frame. So let me zoom out. I go to the M15 time frame. Let me zoom out further again. This is the M15 time frame, and what I look at over here is a previous point of interest that the market can possibly reverse. So here I've gotten a point over here. So my first TP will definitely be here. Okay, let me see how many pips that's going to be. So our entry point is here, and we're coming down to this place. That's going to be 15,000 pips, and that is money, guys. It's money. Let me see if I can do quick multiplication over there. 15,000. Quick multiplication over there. 15,000. Someone should multiply 15,000 by 0.003 for me, and tell me the answer in the chat room. Okay, I'm not going to do that right now, so just do it quickly and send the answer to the chat room. Let's see how much that is going to be if I'm using my my normal lot size. So that's the first TP. The first TP, we set it based on a previous structure. Also do it over here, but in case you want to go to the other time frame, like 30-minute time frame, and set it over there, it is pretty cool. So on a 30-minute time frame, this is what you are going to do. You also look for a previous point of interest where market reverse. Okay, so if you look, we have here, so you just set it maybe a little bit above, or you can set it on it. Okay, now there's one thing that you need to take note of when it comes to setting your, what do they call it, setting your TP and stop loss whatsoever, especially the TP. Do not set your TP at obvious point, a point where you know that the market will reverse, and you went ahead to place your TP below where the market will reserve. In this case, in terms of a bearish run, you don't have to place your stop loss beneath where you see that the market will reverse. No, place it above. All right, so that's what the market, if market were to reverse faster before reaching that point, you will still get your TP hits. And in terms of a bullish run, your TP shouldn't be above where you think that market can possibly reverse. It should be below it, because it's going up. What if it couldn't reach that exact point before turning down? So that's the more reason you don't want your TP to be above a possible reversal point. In terms of a bullish run, you want it to be below, so that your TP can get hit before market reverse. It's just a simple thing, right? It's simple, but when you put money into your brokerage account, you start trading, the money will have effect on you. That's it, psychologically. So it may be influencing some of your decisions, right? So one thing that I have to tell you is that when you enter a trade, price starts moving into your direction a little bit above your SL. When I say above your SL, I mean price started moving in your direction. It has, let's say in this case, it started coming down, and you see a profit which is already bigger than your stop loss. Then quickly bring your stop loss to break even. So in this case, we are bringing our stop loss to break even. Break even means we are putting it at the same side where we took the trade. So here I place it on the previous one, so it has become 1, right? So now we are running at a risk-free trade. We are not having anything to lose. So once our first TP gets hit, then we move it down further. In this case, we are locking profit, so you can even go and sleep, do any other thing at all you want. All right, so now let me check the pip that will be running when our second TP gets hit. Is down here. Okay, that is about 38. That's almost 39,000. Yeah, almost 39,000. Yeah, 38,992. That's almost 39. Okay, so someone should send it to this one. Let me see. Okay, I thought you were talking of the. No, Caleb, I just saw your message, but that wasn't what I was talking about. Okay, let me see. No. You are using 0.01. No, I'm using 0.003. If I'm using 0.01 there, no, bro, that's too much. On volatility 75, using 0.01 is too big unless you have your good CD Tech. Yeah, 45 is ideal. That should be the money you'll be making. Yeah, 45. This one. How about the 39,000 pips? 39,000 pips multiplied by 0.003. Do that one quickly for me and send the answer. Let me see. So even the $45, look at it. Good. 117. IMA 117. That's good. You see, looking at the current rate, when you convert this to Ghana cedis, that's money. That's money, right? So guys, this is something I really want you to take note of really quick. I don't know if I should load you more, or I should just leave it over here, because what is more important is for you to go to your chart right now and try to locate this particular pattern. It can either be tweezer bottom or tweezer top. Locate it and try to see if you can refine it. Okay, if you can refine it. Now the interesting thing is I didn't even tell you about the rules. I was just applying them. I didn't even tell you about the remaining ones. So I gave you only two. I think let me just give you the rest. Okay, so the third one over here is use. I think I even stated it, but I didn't just say that it's a rule. So yeah, use either M1 or M5 for your entry. Like I said, I stated it in a video, but I didn't say that it's a rule. So right now I'm informing you officially. You can take note of it. Use M1 or M5 for the entry. You could see that what our entry, we risked 3,600 and we were like, it's a little bit above our standard. So we came to use something way less than that. So Sadiq, whoever is calculating, use 0.003 multiplied by 3,500. Let me see what you get quickly. Let me do that before we move on. Quickly, someone calculate it and send it to the group. Let's see. 0.003 multiplied by 3,500. Let's see what you are going to get. My target is to risk maximum of $15 per trade. Okay, that's not even up to $11. So yeah, it's cool. 10.5, $10.05. Okay, that's cool. That's cool. Risk. So you could see we were risking only $10. Let me put it that way. $10, and our first TP alone is giving us 45. That's a profit of 35, right? 35. Let me assume the loss, like the $10 loss is being taken out. So that's a profit of 35. That's a cool chop, right? And you go to your second TP 117. That's also a cool chop. Okay, so this is something I really want you to take note of. Now I think let me give you the next one. The next rule that you have to take note of. Wait for candlestick confirmation on your entry time frame. This is our entry time frame M5. So let me go back to it quickly. So you have to wait for candlestick confirmation. All right, confirmation before you take the trade. Now what is our confirmation over here? Our confirmation is a bearish engulfing candle that we've seen over here. Assuming we've not seen this, we are not going to take the trade. That is it. Assuming we've not seen this, we are not going to take the trade. Either it goes to our predicted direction or not. We've not seen any sign to enter, so why should we enter when there's no sign for us to enter? We are definitely gambling or going against our own rules regarding trading. So we definitely have to wait till there's a confirmation. Okay, for that matter, a candlestick that's going to confirm that for you. Now the next thing that you have to look at is enter the trade and put your stop loss maximum of 50% above or below the previous candle. I've talked about that. Like I said, I've talked about all these rules, but I didn't point them as rules because I've been applying them, so I just gave them out without saying that. So right now I'm informing you officially, so just take note of them. Your stop loss 50% below or above the previous candle. The below or above, you understand, when it is when you are running a bullish, when you are trading a bullish this one, let's say a bullish chart, or let's say there's what is it called, tweezer bottom. Tweezer bottom, we're going to give you a bullish run. So let's say you are trading a bullish run, this one, your stop loss have to be 50% below the previous candle. But if it's a bearish this one, your stop loss has to be 50% above the previous candle. That's the whole meaning. And the next thing is use same method to set your okay number 6. Yeah, I just jumped to number 6. Number 6, move to M15. Like you just saw me doing over here. For me to set the first TP, I move to M15 to set our first TP. That's something very simple to do. So you move to M15 for your first TP at high at a high probability reversal zone. high probability reversal zone. Like I said, I've explained these things in a video. Okay, and the next thing is use the same method to set your remaining TPs on M30 time frame, 30 minutes time frame. Use the same method I use on the M15. Use it to set your remaining TPs on the M30 time frame, 30 minutes time frame. So this is the 30 minutes time frame. We came here, we saw these two guys over here. All right, this is a previous resistance which can be a support at any time in the future. So when you come here, you can even see what happened. I didn't even look at this earlier. Look at this. I was talking about profit and I even forgot about this. Look at this. When a TP got hit, in no time, price reverse. So what if you were greedy enough and you were targeting this point? What if you were greedy and you were targeting this point instead of targeting this point? Then probably you are even going to hit break even or on a log profit. Okay, you could see the main reason why I told you earlier on that was when setting your TPs, it should be above, not below. Above, in terms of bearish run, it should be above the previous, previous high probability area where price can equally return. It should be above it, not below. Okay, supposing it is below and you are targeting this, you are definitely going to miss out. Like, you see money but you will not take it. That's the definition. That's it. You see that 117 that Emmanuel posted in the chat room, you will not get it. You end up getting something like, let's say 45 again, because definitely you move your stop loss to your previous TP. Okay, that means you gain 45 2 times 45. That's going to give you $90. That's not bad. But if you are to stay in a trade and gain the other one, you're going to get like something like $160 plus, because it will be $45 the first one plus 117. That's going to give you something like $160 plus, right? So that's better than you being greedy enough to, and I also understand if you are trading with a very, very small account and you're using the smallest lot size on volatility 74, that's 0.001. It may not give you that. It may give you I don't know, but it may give you something like 4.5 or $4 or something like that for the TP1, and a TP2 it may be $10 plus or $11 or something like that, right? I don't really know how much that will be unless you do the calculation at the other side. Okay, so that's it about setting a TPs. Okay, now the other things over there are just bonus tips over here. So the tweezer must be at, listen to this, it must be at the end of a strong bull or bear run. Bullish or bearish run. It must be at the end of a strong bullish or bearish run. Okay, and there's an option for scalping. I don't know if this will permit us to talk about it, because almost 11 and 11 I have to leave here. There's an option for scalping. That's another bonus point over here. So scalping option is when the move forming the tweezer, listen to this, scalping option is when the move forming the tweezer is not strong, but the candles to the anticipated direction move. Let me take this again. Scalping option is when the move forming the tweezer is not strong, but the candles which are moving to the anticipated direction, okay, are moving with what? A high momentum. This, I think we'll have time to come and talk about these scalping options, because if you couldn't identify a tweezer as that of a scalping option and you happen to enter a trade like this and set your TPs like this, listen, it is like suicide mission. Okay, it's like a suicide mission. Price will definitely reverse against you and hit your SL, and you'll be crying. Then we will start singing, don't cry, oh, I did go and share. Anyway, that's just by the way. It's 10:59 over here, and I think this is how far we will go. So I'm just coming to the chat right now, and let's see if there's something we need to tackle and a question to answer. CD Tech, please, which statement are you referring to? I think let me just go and make all of you, if anyone wants to speak, the person can unmute him or herself. I'm going to allow all of you right now. If you want to speak, you just allow yourself, unmute yourself. Let me know. We take it one by one. All right, so you all are allowed to speak now. If you have a question, go ahead and ask me before you start crying. And we'll be like, I need to go and share you. Purpose driven, that's Ruby. God alone, Calebilonia. And the rest, I can see your this one. Okay, anyone with a question, feel free to ask me. It's 11 a.m. right here, and I will be off. Okay, so just to conclude, we have looked at tweezer top, right? We've looked at tweezer top. I think when time permits, another time we would look at tweezer bottom, and we'll also look at the scalping option, right? Let me go to the daily time frame and show you something. This is also another what do you call it? Another tweezer top over here, which you can also trade and run this move to the down. This is a typical tweezer bottom, which is for scalping, but time will not permit us to talk about this. This is for scalping. This is a scalping one. Okay, you can see it is not 100% fully formed. Okay, it's not 100% fully formed. At least it should be like 99% or something like that before you can take it as a normal trade. But right now it hasn't formed fully. Okay, so it's for scalping. There are some things you need to identify about that. The momentum of the candle, the number of candles that form in terms of the bearish move and a bullish move before you determine if you should take it as a long trade or just a scalping. Okay, yeah, I think that's that. I'm just waiting for your question. That's how come I'm going through this, because I want to see if there's a question for me to answer before okay, I've actually allowed you to speak, but okay, I'm just reading your chat. I've gotten a statement. I have a question. Can the tweezer top be spotted on? Yeah, from the beginning of this one, I stated that what when you want to confirm something to the downside, you first of all look at the higher time frame, and on the higher time frame, there's anything that form over there, let's say resistance on a higher time frame, it's highly respected when you move down to a lower time frame. Now let me take you to the H4 time frame. Of course, tweezer top and tweezer bottom form on any time frame at all. Even M1, even 1 second time frame, you see all these patterns forming over here. This is a typical example on H4 time frame. This is a tweezer top on an H4 time frame over here. Alright, this is it. But for us to trust this setup so much and start, changing our mind to trade them, myself, I consider those form on a daily time frame. So that means you will not trade every day. You may not trade every day. You have to wait for something to meet your criteria before you take a trade. Okay. So I've just shown you a typical tweezer top on H4 time frame. Let me see if I can see maybe a tweezer bottom or something like that. Yeah, this over here, that's causing the reversal. This is okay. I will not say this is a tweezer. This is a bullish engulfing. That's not tweezer. Okay, that's not tweezer. Okay, look at this. This is almost like a tweezer. I wouldn't say it's a tweezer, yeah, but it's almost like a tweezer. But look at how price move up afterwards on the H4 time frame. Okay, this is like, okay, I'll say a bullish, not bullish, sorry, I mean bearish engulfing. Yeah, let me take this out so that I can see clearly. This is bearish engulfing, but look at how price move up without aggressive move. Okay, so tweezers, they form on every time frame, but how strong can they determine, can you use them to take a decision? That's the thing. Okay, so Sadiq, I guess I've answered your question. If there's any other thing, please let me know before I end the call. I'm going to stop the recording, so if there's any other thing, let me know before I stop. Okay, so in the next 2 minutes I'll end, right? In the next 2 minutes I'll end. So if there's no question or so ever again, I think we are good to go. All right, and thank you so much for joining, and I hope you've learned something from this session. And what I'll highly advise you to do is, do not just listen to this, do not just get motivated and that's going to be the end. If that's how you're going to do it, then sorry to say, but there's no way you're going to be profitable, there's no way you're going to make money unless you take the damn action on the information you have received. Go and check the chart for yourself, find out if what I'm saying is true or not. That's the most important aspect. Find out for yourself if what I am saying is true or not. Okay, so I'm pleading with you, do that for yourself. Cross check your charts. The hardest thing that most traders or we have to do as traders is to backtest. Backtest means when you get a strategy, you try to find out like using previous data to find out if the strategy is really working or not. Okay, so go check this out and find out for yourself if it works or not. Thank you. Yeah, Ruby, you wanted to say something, right? Sorry, your voice is kind of down late.
Just give me how long. I'm forcing to on the left side. Just repeat. Hello.
Yeah, I can hear you now. Speak.
Hello.
Yeah, go ahead.
Okay, it's so low. I can't.
Ruby, go ahead.
Hello.
Yeah, Ruby.
Your interview good and I really understood that as you're saying, we need to find some more better set. But I haven't been clear on lot sizes, so I got confused at the lot sizes we got there. So probably as another class where you organize about lot sizes, I'll be happy about it.
Okay, you've not had a lot or more information about lot size. I think lot size, if you go through the channel, you probably see some information about it. Okay, so go through the channel, you see some information about lot size. I think LK talked about that. Literally, I wasn't the only one who taught during that period. I invited the person who actually mentored me, who taught me first in forex trading.
Oh, okay.
City Tech, there is an engine hitting at your side. There is an engine hitting at your side, so it's hey. Okay, good. So I think yeah, it's almost 11:10 and I got to go now. So hopefully I'll see you when we happen to organize another session. But like I said, I'm pleading with you, go and test this, find out if it really work or not. That's this one. Like, is it a request I'm making? Yeah. That's the only thing I'm asking you to do for me. A favor I'm asking you to do for me. Go and find out for yourself if what I'm saying really work or not, right? So after that, you can leave me a comment in the chat group on Telegram. Okay. So until then, we gotta meet another time. Hey, this recording is about 1 hour. Okay. Goodbye.